In this video, we're going to fill out the IRS Form W-4 as married filing jointly. Now, I'm going to go through 3 separate calculations, and then the final calculation is going to be the IRS Form W-4, the online estimator, which is by far the best way of doing it. But I want to run through these calculations just so you could see the differences on how each calculation will affect your paycheck. So the first way that we're going to use is just filling out this paper version. Now, whether or not you have the paper version or you have to use your employer's online portal, it doesn't matter because you're going to use the same answers, whether or not it's just in the paper version that you're submitting to your employer, or if you're taking this information and putting it into the portal. So the first way that we're going to do it is going through just this paper version right here. And we're literally going to just fill out the top, sign it, and give it to our employer. Now I'm going to run through an example of a married couple that each have 1 job. So we're going to fill this out for 2 jobs as married filing jointly. So in this example that I'll walk you through, and we're going to use the same example in each of the calculations, one spouse earns $125,000. The other one is going to earn $62,500. So I'm going to show you what this looks like. So if we did that, if all we did was fill out the IRS Form W-4, we can go into this paycheck calculator and look at exactly what our federal withholdings would be and what our paycheck would be. So in the example, I already put in $125,000 as being paid bi-weekly. And because we didn't fill out any of the things in the W-4, so if we look at right here, you're going to see that there are 4 boxes right here. If we left those all blank and just filled out the top and signed it, that is what we're looking at right here. So this would be the first box, that second box, third and fourth box. So we didn't fill it out, so we just put in zeros. And we're not exempt from anything, so we just said no to this. And then over here, we can see that for the $125,000 job, for our federal income tax withholdings, it's going to be $772.15. I also did the other job that we can see here at $62,500. Everything is exactly the same. Everything is just zeros. We just signed it and submitted it. This is going to have a withholdings of $231.17. So here's how those two break down, because when you're married filing jointly, you're doing your taxes together, married filing jointly. So the way that this math works out is the $125,000 job is going to end up withholding that $772.15, and we're getting paid 26 times throughout the course of the year. So that's going to equal $20,075.90. So the $62,500 job, that is going to be at $231.17 for 26 pay periods again. And that is going to equal $6,010.42. If we add these up, that's going to equal $26,086.32. So this is how much we would withhold if all we did was fill out the top, sign it, and submit it. Now, the second way that I want to show you how to do this is if we use this worksheet, this 2 jobs worksheet on the paper version. So what you're going to do is I'm going to pull it up on the screen here. So we could take a look at this 2 jobs worksheet. I'm going to scroll down to it, and it's pretty easy to look at. What you're going to do is you're going to take the high income paying job and you're going to go down to it, and you're going to look at the range that you're in. So we're at 125 for the high paying job. So I'll highlight it there. And then for the lower paying job, we're at 62,500, which is right there. And if we bring these two together, we could see that it's $10,610. So what you'll need to do is go back up to this page right here with the multiple jobs worksheet for 2 jobs that you can see right there. And then we're going to go ahead and put in that number. And I'm going to just pull it up right here so we can get through this a little bit quicker. So it's going to show you the $10,610 there. Then we're going to put in the amount of pay periods. and then we're going to divide that. So we're going to divide the 10,610 divided by 26, and that's where we're going to get our $408. Now, all you'll need to do is take that number and put it on line 4C of your IRS Form W-4 for the higher paying job, which would be 4C right here. And I use this worksheet for something else, so it has different numbers in there, but you can see that 4C would go right there. So that's where we'd put in. This is per paycheck, and it says it right there on the IRS Form W-4. So it's per paycheck that it's going to make that additional withholdings. So if we go back to our calculator, we can actually run that number to show what the difference would be. So we'll put in $408 there, and it's okay to round here. So it's going to be $1,180.15. So what we'll do there is we're going to multiply that by our 26 pay periods. So because we didn't do anything to the second one where we just literally fill at the top and signed it, this will actually stay the same, but this one's going to be calculated a little bit differently. And from that number, it's going to be $1,180.15 multiplied by the 26 pay periods. And that is going to equal $30,683.90. And if we add that to our $6,1042 over there, so I'm going to just rewrite that really quickly, $6,010.42, we're going to get $36,694.32. So you can see that you're going to get vastly different answers with the different calculations. And what you're going to find is that using these calculations are not going to be as accurate as using the online estimator. And let me show you why. So if we go to it, I'm going to pull up the online estimator, which I've already filled out. So again, we can get through this a little bit quicker. But if we go through it as married filing jointly, and then we go to our income section, the big difference here is that if we go to the income section and put in our information, so we're going to put in when our last pay stub was, we're going to put in, enter your wages or salaries per pay period. We're going to enter the salary year to date. You're going to put all this information. Then it's going to ask you, what have you paid in federal withholding so far? And what are you currently withholding? So once you get this information from your pay stub, then you want to put it in there. You have to use your most recent pay stub or this will not work. Now, if we enter in both jobs to get the exact same amount of money in here and go to the very end, we're going to go to the deductions. We're going to take the standard deduction for 2023. That's going up to $27,700 that you can see right there. And then we're going to go to the results. And we're going to see that our expected withholdings is $25,250, but what we really need to get to is $25,771. I'm also going to show you why people get so confused by this in just a second, so stick with me on this. If we scroll down, we're going to see that it's going to produce two W-4s. What you want to do is you want to click on them, and then you want to use these exact answers. So for this one, just fill in your basic information at the top, leave the married filing jointly checked, and then right here on 4C, it's adding $319. Now you might be wondering, why is it $319? If I go back to the online estimator, it's saying that I only need an extra $521, but why is it putting it up to $319? Well, it's not only doing that, on the second one, it's also adding an additional $99 of extra withholdings. Now, here's one of the biggest mistakes that I see is that you would think that it's going to increase your current withholdings by $99 on the second one or the $319 on that first one. And that is not true. And here's why. If we go back and we just read this, what it's saying is that your standard withholding is $642. So if we just filled this out, then it would withhold $642. However, from that number, we need to increase it by $319. So for argument's sake, let's just say that we were currently at $500, then, and it said $319 down here. It's not $319 from wherever you're currently withholding. It's $319 only from the $462. That's where they're getting that math from. Now, a quick calculator here just to show you the taxes that I built out on a Google Sheet. This is exactly the same number. With no other credits, no other deductions, you can see that it's $25,771, just applying the married filing jointly tax brackets with the standard deduction of $27,700. This is why you want to make sure that you're using the online estimator so it can make those small adjustments. So while it might seem that our answer is pretty close to this one, so the accurate answer using the online estimator is pretty close to what we would say is the fast way of doing it, just signing it and submitting it, which is right here. This does not take into account any of our previous withholdings, nor does this one. So they could potentially be significantly off when you go ahead and do your own calculations. So again, use the online estimator. It's absolutely the best way to do it. It's the most accurate. Don't take my word for it. That is what the IRS says. If you have any questions on this, let me know in the comments down below. And if you've enjoyed this video, be sure to subscribe and we'll see you on the next one.